Well, speaking of Havells, then clearly reacting to its subdued performance in Q2, let's connect with Anil Rai Gupta. He's Chairman Managing Director of the company to forecast the growth ahead as well as understand what the pain points have been. Thanks much for taking time out, Mr. Gupta. Revenue growth was strong, but that really came at the cost of margins given that your EBITDA has declined nearly 30% on year. So what really led to the miss on the EBITDA front?
Actually, I would say it's a time when it was the tapering of inflation. If you know, going into the first quarter as well as running into the second quarter, the raw material prices had started tapering. So it's a reflection of high cost inventory and the prices actually softening in the market for certain product categories, like especially like cables and wires. And hence, it was a perfect storm kind of a situation where the inventories are at a higher level and you are selling at a lower price. So this is transient. The way the raw materials had gone up in the last year caused a lot of inflation. Probably all the prices were not passed on to the market, and this is the time when raw material prices were softening. So, so that's the reason for the decline in the margins. I think most of the pain has been caused in the second quarter. And going forward in the third and fourth quarter, things are coming back to normal.
Okay, now given that the Lloyd segment has not only reported a loss on the EBIT level, but also at the contribution level, what is the reason behind this? How do you see Lloyd's performance?
In a very similar situation in Lloyd, we had coming out of the season, which actually started slowing down in the month of May and June. High levels of inventories were there in the system, which were at very high cost, which were manufactured all in the last year when the raw material prices were at high. And going into the off season where the sales, not only the sales are lower, but also the price could not be fully absorbed. So again, a very typical situation. Most of it is covered. Some of it will remain in the third quarter, but very normalized levels coming back in the fourth quarter for Lloyd.
Should reach normalized levels in quarter four, but Mr. Gupta, Lloyd has been underperforming for a while. In fact, if you look at the last 4 to 5 quarters, that has been reporting EBIT losses. Going forward, how do you expect this performance to improve from here on?
Yeah, I think for Lloyd, the very satisfying thing is this revenue growth, which in the first 6 months is over 50%. Even in this quarter, it's around 25%. So the revenue growth has been extremely strong. We are gaining market shares in product categories. The new product categories like refrigerators and washing machines have started doing well in the market. So definitely there's a huge turnaround on the revenue basis. On the contribution, as I said, some amount of high cost inventory is left out in the third quarter, but fourth quarter we will definitely see positive margins.
Okay, so that's the big takeaway coming in, that positive margins for the Lloyd segment from Q4 onwards. But you also talked about how you're looking at increasing the market share for Lloyd, and perhaps that's what is causing a bit of a cost impact as well. Can you talk to us about how the market share has actually moved?
We do believe, the AC category, which is the strongest category for the Lloyd segment, we have been amongst the top 3 players, probably around the top second player also. So we've grown from a situation of around 5th position to almost the 2nd or the 3rd position in this.
Guys, put off the AC.
About the inventories, what's the inventory stocking been like ahead of the festive season? What kind of stock is there with dealers?
The initial start of the festive season was slow, but over the last 15 days, we've seen a pickup. And there was not a huge inventory buildup because people would be a bit more cautious this time. But I think the secondary sales have started doing well in the festive season during the last couple of weeks.
I'm not going to press you on giving guidance because I understand there is volatility, but what is it that your shareholders, the investor community at large, analysts need to watch out for? What can you tell us when it comes to your outlook as far as margins go, the kind of trajectory we're likely to see when it comes to inflation, input costs, pricing?
Well, things have come down and now stabilized, and hence the input costs are coming back to normalized levels. As I said, going into the third and especially in the fourth quarter, things will be back to normalized levels.
And finally, your total ad spends were also rather elevated at about 87 crores in Q2. Will they continue to remain elevated, or you think they'll temper down?
No, I think one of the key things for us has always been to keep investing in the brand, and Lloyd also needs that kind of input for a few years. So the advertising spends will continue to remain elevated.
All right, that's the view coming in from the management of Havells, talking about their overall growth outlook and the outlook on their margins. The reflection of high cost inventory has been felt on the margins, and raw material prices are seeing tapering off in Q1, Q2, with normalized margins for Lloyd expected by Q4. That's the stock down about 3% in trade at 12.11.